It's Brian Preston, the money guy.
Let's address this now, because I think it may have been Fu Manchu who asked this. Hey, are CDs a good way to save for like short-term events, for short-term ideas like cash accounts and that sort of thing? First of all, what is a certificate deposit? How's it work? And then is that a thing to be doing right now in a rising rate? And are there risks associated with that? How would you tackle that?
Well, CDs have a place in my heart. I won't say a fond place in my heart because this was the only way my parents knew how to invest.
Sure.
And it frustrates me to no end because when my parents thought of investing, it was CDs. And CDs are something that your local bank will offer you. And this is the promise they give you is that, hey, if you let us lock your money up, and they have stated periods, it could be 6 months, it can be 12 months, it can be multiple years. You say, you're basically promising them you won't pull this money out, because if you do, there's a penalty or you forfeit potentially the income that it could have made. But you're giving them the promise, I'm going to let you make use of this money and I'm going to lock up my ability to take it out or try to lock it up so that you will pay me a premium on the interest rate. And I think we're in this unique time now where interest rates have gone up dramatically. The Federal Reserve
rapidly
is fighting inflation, so they're raising rates very quickly. So we have gone from where your savings accounts, even at the high yield banks, online banks that are FDIC insured, we've gone from where they were paying less than 1% to where currently it's not uncommon to be able to get well over 2.5% just on your FDIC insured money market that has no limitation on when you can pull that money out. You can put it in today, and next week you can go pull it right back out with no penalty, and they'll just pay you for the 7 days that you let them actually have the privilege of holding your money. Because let me tell you my concerns with CD investing. Like I said, this is coming from a place from parents who did this, is that for older people, or let's just say people who are thinking of CDs and instead of investment, because right now they feel really safe. Mm-hmm. So a lot of people are saying that's how I'll invest, because there's CDs now that if you lock it up for a little over a year, you can get over 3% now on these things, even 3.5%, and be like, man, 3.5% risk-free feels really good right now. But if you're looking at it from an investment standpoint, I always tell you, be careful of what's going on in the background that you might not see with in the context of CDs. Yes, you're getting 3.5% risk-free, but if inflation's 8%, over the long term, your purchasing power is getting eaten alive. Mm-hmm. I mean, your purchasing power is being eroded right before your eyes if you're making 3.5%, but things are going up by 8%, because investing, yes, is painful right now, but over the long term, there's a close to 9% spread since 1980 to 2021 of what markets have done, the S&P 500 specifically, over what the stated inflation rate was. That's something that you're going to have the opportunity when economies recover, you'll be there. So that's the difference between CDs for investment. But Bo, I want to talk about cash reserves, because specifically he was asking about, should I use this for cash reserves? Are there any limitations that people ought to think about for CDs in that aspect?
This is what I think is so interesting. We as humans suffer horrendously from recency bias. Here's a great example. If I were to tell everyone, hey, right now you can go get a 4% mortgage, everyone would be like, oh my gosh, that sounds incredible. Oh, that sounds so amazing. If we rewinded 2 years ago and I told you that you could have a 4% mortgage, oh my God, that's so high. No way, right? We all struggle from that. So right now we're seeing these CD rates and they're looking really attractive. Well, yeah, they sound really attractive right now, but what if you go buy a 2-year CD and you lock your money up at 4%, 4.5%, but interest rates keep rising and they keep going up, and then all of a sudden money markets are paying 4 to 5%, and then CDs are paying 6 to 7%. You're gonna be like, man, why did I captivate those dollars and lock them in a rising rate environment where maybe I didn't have to? So right now, while things are on this move, I would be a little hesitant to lock my emergency reserves inside of a CD, just because you can go get really, really attractive yields with no strings, with no handcuffs on it. Now, I know, yes, there are no penalty CDs. I've already seen people mention that chat. That is true, but do you really want to go through the difficulty of having to go buy a product, underwrite a product, figure out the product, when just opening up a high yield savings account for your emergency fund that you can get to within 1 to 3 days might be a whole lot of an easier solution for someone who's trying to hold cash reserves.
Bo, I thought this is just a coincidence. I was on, I wanted to go look up what the Fidelity Cash Reserves Fund paid 7-day moving yield, because that's how you can figure out what's going on. So I typed in, I think it's FDRXX, and then it pulled up. And what I thought was interesting was this is to give context that what we don't understand is that the low interest rate, the 0% interest rate that we were all so used to, is not the normal. What's normal, because if you looked at the since inception on the Fidelity Cash Reserves, it was like over 4%. And I think that is something that people ought to remember. Cash in the past does pay more than 0.5% or 35 basis points like your bank is probably offering you. So don't get so excited, get caught up in the moment, like Bo said, and see a CD that's paying 3.5% and be like, yeah, let's go lock it up for 1.5 to 2 years, when you might be surprised that you could be earning that exactly what Bo was talking about, just out of the money market with no lockup period. And that's probably, and because cash reserves for me needs to be money I could get my hands on really quick, because they're there for the rainy day fund. They're there for the emergencies. I don't like how CDs have the threat that they could essentially penalize me. And I know they won't take away my money, but just the benefit or the premium I'm getting could be undermined if I had a need for it. So why not just go with something that has zero restrictions, and like the high yield money markets? And
this part's just for free. If you're a big cash holder, know that there are different shares of money market funds. There are different classes you can buy. Some of them might pay like 2.5%, 2.6% for balances under 100,000. Some of them, if you have over 100,000, you can get 3%. So make sure you're looking at that when you choose your money market account that you're utilizing.
Well, I mean, to your point on that, if you go look, I mean, I think like the Fidelity Cash Reserves was like 2.52. This is, I'm dating this, but it'll be okay. Whereas the 100, because anybody can do those accounts, but if you have $100,000 of cash, it was right at 3%.
That's right, yep.
And then there's $1 million one that is really right on where the Treasury. I mean, there's the spread between what Treasuries are offering and those is right really tight. So that's a great another value add there, Bo.